All right. Good morning, everybody. So we had oil moving around a little bit. Not too big of a deal. We want to check the overnight hours, make sure around the world nothing really substantial or drastic has happened. And there hasn't been. Wayfin is a good place for that. It's free. Um, I don't need to do a commercial for somebody, but it's free limited. Uh, it's a place that I used to use a lot more when you had unlimited access to everything for free. Now you have to pay to get access to a lot of parts of Koifin, but it's still pretty useful. Right now we're on FX Street. It's another free place. This does a reasonably decent job of giving you an idea of what may be impactful today. We do have job numbers coming up, which reminds me, I didn't edit this. Just a second. Yeah, non-farm payrolls is a big one. All right, that's a little bit better. So as you can see, it's a full house. We got a lot of things on the agenda today. One of the reasons that I come over to FX Street is because of this little excerpt up at the top. I can get a list of things that's going to have economic events from a lot of different places, but I'm constantly looking for anything about the dollar. If you haven't heard me talk about it before, when it comes to the dollar, just seeing that the dollar is up or just seeing that it's down doesn't really provide enough insight. If the global market is getting into the dollar because they're looking for a safe haven, then it's really important to realize the dollar is going up because of fear. But there are other times when the global market is getting into the dollar because they want access to our marketplace. And then when they get access, they are buying our stock. And that is a different reason to see the dollar go up. So just seeing the dollar go up or go down on its own isn't enough. We want to have a why behind it. And right now, the why behind it continues to be that it is a global safe haven. Kind of the old phrase, our junk is better than somebody else's junk. If a fund manager is going to be penalized by going to cash, literally taking losses because he's sitting in cash, he's not going to go to cash. He's going to go to something. Well, where are you going to go right now? Right? If you're a fund manager and you have to have your money somewhere in the market, what are you going to do? Buy the ruble? That's a joke. The peso, the yuan? No, you're going to buy the American dollar, right? And that's the dollar index that we look at, the DXY. That's not like quote the US dollar. It's a dollar index. It is an index is a basket of something, right? And so even that one is a basket of different currencies. It's hard to find good places that will discuss what's going on in the dollar from that perspective. So I tend to hit up FX Street. It's better than nothing. So as you can see on the agenda today, we've got a lot of things. It's all about the job numbers again. 7:30, 8:15, 8:30, 10, 10:30, 11, 11:30. It's just nonstop all day today. And make no mistake about it, these additional auctions here are game changers. I make a lot of my money coming off of that other side of these announcements. They are never highlighted on FX Street as being impactful. Most people ignore them and don't even talk about them. They are game changers in the market. Go back and look at how many times the market has reversed midday at 11 o'clock, 11:30, or 1 o'clock, because there's often a 1 o'clock auction. Right on the dot, everything starts to change. The advanced decline turns, the cumulative tick turns, everything flips, starts running the other way, and we get a complete change in market sentiment. So to me, these are absolutely worth paying attention to. Of course, as usual, there's no promise that these are going to do anything in the market. The main thing that I look for on a day-to-day basis is this reversal. I don't care if it's a reversal to the upside or a reversal to the downside. Every day at lunch, call a timeout, reevaluate the market conditions, and start gaming it out and asking the questions. What if? What if we go up from here? What if we go down here? Because there's one thing that I'm almost guaranteed, we're not going to stay there. That range is too damn tight. It's too early in the day. We're not going to just stay right there for the rest of the day. It's almost guaranteed you will not stay there for the rest of the day. Fine. If we're not staying there, where the hell are you going? Start gaming it out. Get ready for your play. Yeah, you like it. I already drew the lines. So for today, we have, as we always do, three possibilities. We stay range bound, we run an inside day breakout to the upside, or we run an inside day breakout to the downside. We are range bound right in the middle of yesterday, focusing on yesterday's lowest point to yesterday's highest point. That would be our range. That's a really wide range. So as usual, I like to break that range down a little bit. If that is the entirety of our range at the moment, then narrowing it down would be focusing on yesterday's lowest point to our current Globex high. Then the other side of that range would be from yesterday's highest point to our current Globex high. That would at least break things down into two zones or two quadrants with milestones and goalposts. We are maintaining a nice ride above the VWAP. We are above the open of the Globex. We are slightly up on the day, 0.5%, 1/10 of 1%, 0.5 of a percent, right? Say it however you want. Today's ADR is 2.7. And if you notice, I've got the ADR bear target to the downside. It's slightly off. I cut off a few pennies, made it a round number, 4,000. And we have one to the upside, cut off a few pennies and made it a round number, 4,200. But there's also two additional lines that I've got here. The 1-day expected move, top and bottom. Now, if you've seen enough of my morning briefings, you know that the expected move that we refer to most of the time is the weekly expected move. Well, this is a 1-day expected move. The expected move formula uses the square root of time. Well, once you know what the formula is, rather than doing a 5-day calculation, you can do a 1-day calculation. So this 1-day expected move is a dynamic expected move. It is based on what this label says right here on the Series 2 expected move. So if we go into the options chain and we look at the Series 2, the second series, because right now it's still reading that one. So we can't use the front one. We had to use the next one. 22.47 implied volatility, 40.3 expected move. It's not updating because I'm not on the right time frame. Close enough. When I drew all this out, it was sitting at 48.5. These things are based on time. Less time, the number is getting smaller and smaller. So our bull case, we would need to break through our own Globex high. We would have to break through the Globex low of yesterday, which is that pivot point that price hit yesterday when it tried to rally back up. Then we would focus on the open of yesterday, which is really close to the Globex high of yesterday, and then an inside day breakout. We would be breaking through the top of the yesterday's highest point. Then we would focus on that ADR target at 4,200. Now I get it, 4,200 is a long ways away from our current location, and it seems like I'm reaching. But the ADR is our current movement. This is not something that we think the market can do. This is what the market has been doing in the last 21 days. Our average move is about 110 points a day over the last 21 days. That's been our average movement. So making a move up to 4,200 is not an unrealistic target. Same thing with a move to the downside down to 4,000. This may seem like a lot, but it's well within the boundaries of our ADR. So we could go to 4,000 and it would just be considered normal. If we wanted to take it one step farther than that, it would be 39.5, 39.5 way down here. That would be the beginning of a extreme move, just the beginning of extreme. It wouldn't even be extreme at that point. I want to step back a little, go out to this higher time frame that we've been using to continue the discussion of what we've been talking about. Where are those gravity points? So we got a critical cog line at 4,200, basically 4,211, where cogs reside. And we have that new validated cog line at 4031. Yeah, 4031. When we're on this higher time frame, we want to focus on where those higher highs and higher lows are at. Right? So this was our last lower high from the chain. And we've got our first higher high since this bottoming formation. But just like we were talking about yesterday when I said that is not a confirmed higher low, neither is this one. It's not a confirmed higher low until our current price gets back above this last swing high. Until then, this could continue to go lower and lower and lower and lower, not yet setting a low side pivot, right? If you're looking for a full set, then you need two higher highs and two higher lows. Right now, we only have one higher high and not yet even one higher low. So when you're trying to make the argument for, is this a bullish reversal? Are we going to get a good run to the upside? Is it just a dead cat bounce? The argument leans more into it's just a dead cat bounce. But as I've been saying in the chat for the last few days, the only reason I continue to post bullish setups is because if the entire market is looking down, I'm going to look up. And the more that I hear on Bloomberg and other places, these fund managers that say, "Oh yeah, we're net short." Yeah, okay. There was a significant level of volume yesterday in the S&P. No, it was Tuesday. Sorry. And that volume showed pretty clearly 1.4 million volume on the S&P as opposed to 2.1 million volume back at that level. And if you take it out to a higher time frame, look at where those high volume areas 1.5, 1.7, 2.1 million. So looking at that, kind of got the capacity for an upside surprise, a little bit of a shake and bake. But we're not talking about recovering back to the previous levels, right? This move in the market to the downside is most definitely not done yet. And we have some really big names that are going to split soon. And that's going to create some positive flow too. All right, so you can see we got really close to the expected move yesterday, 40.67. We didn't hit it. We just got really close to it. We're still within the boundaries of the weekly expected move, and we're moving away from the lower edge. Looking at yesterday's volume profile, there is no untouched point of control to focus on, but there is the value area high and low. Now, like I've said before, I don't personally carry those forward. If you read in the textbooks about how to use these volume profiles, it is suggested that you can do it. So I certainly wouldn't say that you shouldn't. I just don't, right? I've got enough pivot points that I don't need another one like that. But you certainly could. So from that point of view, you could carry forward the value area high and the value area low. But if you notice, it's really, really close to yesterday's highest point and yesterday's lowest point. I already have my pivots at those locations anyways, because it is the high and the low of yesterday. So I end up marking that spot anyways, but based on a different reason. Remember, when we're just drawing a line and connecting wicks and connecting pivot points, you want to try to find some validity behind it other than just, oh, well, price turned there and went the other way. Yeah, so is that all you got? There is a significant level of volume right over our head, right at the Globex high, 41.25. It's going to take a hell of a push to get through that zone. It should not be subtle, right? Either something like non-farm payrolls or some other economic event could easily press us through that zone. And we would, at that point, focus on a rejection or a first touch play at yesterday's highest point. We are still outside of the box. We've been outside of the box every day this week, slowly working our way down to get back inside the box. And yet, even though we've been outside of the box all week, we still have not attained enough volume to move that point of control up here. It is still really far below us in this zone because we spent a lot of time there. We can tell that we spent a lot of time here because the time profile is showing us that we spent a lot of time there. That's where the point of control is on time. When we're outside the box, we have every expectation that price is going to move to get back inside the box. So when we are outside of it, we want to ask the question, are we moving closer to the box or are we moving farther away from the box? It takes a lot of push to get farther away from the box. There's always something there, right? So our expectations for today, are we going to be bullish or bearish? It's going to be directly connected to the econ that comes out this morning. The Ukrainian president is lighting up finance juice. He says there is a possibility of an inflection point in the country's conflict. That's very likely to galvanize some news. All right, so looking at the NASDAQ, we've got the same scenario. We're range bound. We're sitting just about in the midpoint of yesterday's lowest and yesterday's highest point. We've been in this area now for a significant period of time. We're just winding up more and more and more energy. Energy is a weird word that we don't use very often. We really started getting into it from the RSI Laguerre, which I've got in the Discord a lot of material on the RSI Laguerre. If you want to understand more about it, there's been books written on it and just all kinds of stuff. We used that indicator when it was designed, and we started to figure out that when price is paused like this, maintaining in a range, you'll often see it do that and build up more and more and more energy until finally it makes a move. Now we knew things like IX10, inside day. We knew that when markets make a pause and consolidate, that they often break out of that consolidation, usually using things like a squeeze indicator, right? But squeeze measures volatility. So for the NASDAQ, we've got a 3.6% ADR. These ADR targets are from yesterday, so we need to draw some new ones from the open of the Globex. 3.68 would put us at really nice round number 13. And the same thing the other way. Just about 12.1. Now, if we were to use this series, we got to check and make sure that it's the right series. We don't want the front series because that one's now expired. You see it has Wednesday on it. So we need to use the June 2 QN1M, right? So we got to make sure we're using this one. It's the second series, 3289, 217, 249. It's a little off. It's the thing about Thinkorswim when you run indicators that's trying to get anything off of this. You're always going to have a little bit of, it's always going to be a little off. Very likely it'll update when the market opens up. All right, same thing. Value area high, value area low can be carried forward. There's no untouched point of control anywhere within our range that we would need to worry about. And then looking at it on the 10-day, 30-minute, we've got a significant level of volume right at our current location. So we're hitting right into that volume resistance. Should we get through that, we'll start working on our pivot points from yesterday and from Friday into Sunday, or the holiday high and the topside breakout. You do want to keep in mind we're outside of the box, right? We're outside the volume profile. When we're outside the box, we have every expectation that we're going to come back inside the box. So I want to point out something from yesterday that I thought was pretty insightful. So every day we're watching that cumulative tick, and yesterday the Russell broke down really fast, really early. This is the Russell breakover that we talk about a lot. It's that green line. The Russell broke through the group and really started making that move to the downside while the rest of the group still hadn't yet really got significantly wild. It was it was almost like the darn thing wasn't working right. Zoom in on that thing. It was working right. It was so significant at the time. It was like this thing must not be reading what's going on out there. Right? It was pretty wild. Everything did roll over though within that first 30 minutes. And then we got that move to the downside. Nice consolidation, nice little pause around that lunchtime. And then everything started to roll over after lunch. We got that Russell crossover again, starting with the crossover of the NASDAQ, and then finally later a crossover in the NYSE. This thing has been an absolute amazing source of perspective in the market. Right? I don't trade just because I see this thing, but it certainly provides a heads up on the day. Cumulative tick, right? And it resets every day. I had somebody ask, do we carry forward these values into tomorrow? No, it it has no memory, right? So tomorrow we'll start over, or today we'll start over with no memory of what it was doing yesterday. It'll just start right at 9:30 and go. The ticks yesterday, look at what we were doing all morning long. We stayed predominantly in the red area with a little bit of a dip to the upside. Sure, we did cross through into the green, but for most of the morning, from 9:30 all the way up to lunch, we stayed dominantly in the red. And then after lunch, around 12:30, when we started talking about that reversal, right? Here's the Nasdaq, and here's the S&P. Here's that reversal. When you line that up, you got your crossover in the cumulative tick. You got the ticks up here starting to go into the green. And as we roll across, notice we started staying more in the green. And it was sloppy at first. It wasn't very clear and clean. We did have some deep draws down into that red zone, but we were staying predominantly in the red, in the green, and we weren't getting that just choppy, nasty crossover. Right? And so you could just see how we maintained that green, and that's just regular tick. So we had cumulative tick, aggressive crossover in the Russell moving to the upside. We're looking at the advance versus the decline. It started coming back towards zero. We had that little micro double bottom in the day. Price started making its move up, and we had already did an evaluation and said, theoretically it's possible price can stay there for the rest of the day, but that's a very narrow zone, and it's unlikely that we're going to stay there for the rest of the day. So you want to start gaming out. If we're not going to stay here, then where the hell are we going to go? Now, I like to try to buy along these lows for a topside breakout, but it doesn't always give you a second chance, right? And if it's a V bottom, well, you didn't know that that was the low until we don't go back there again, and then we're able to look back and say, "Oh yeah, look, that was the low right there." So V bottoms are hard to catch, but something like this, where price is building a base at a midday low, these are gold mines of opportunity, and we're getting a lot of them lately. Right? So you really want to focus on those midday reversals. Look at the clock. The clock continues to be a very insightful tool. With all of the economic events on the table today, run a lot of small profit trades, right? Say it another way, get your profit and get out. Don't try to stick a move all day long. because we're very likely going to have data that comes out that is somewhat bullish, somewhat bearish. It may be conflicting information. And watch for anybody coming out on the talking list. Right? We didn't do it this morning. I should have. FX, or not FX Street, but Finance Juice. This is a really great source for who's speaking today. You can see for an example, they've got one right there. They want to go in here and see who's talking, who's going to be on what channel, what time frame. You got Logan and Miser today, 11 and 12. Of course, I'm pretty sure that these are my time zones, so check yours. But this is a really great source for who's on it, right? I will say, if you're going to use Financial Juice, take the opportunity to adjust it, because it'll show you stuff from like MSNBC and all kinds of places that I consider just to be spam junk. Well, you can turn that stuff off. It doesn't have to show you that. So you can choose who its sources are. All right, so looking at the sectors today, we got a lot of them that don't match my criteria of being a up or down at least a 0.5%. Gold's just past the line. Emerging markets, semiconductors, a little bit on the airlines, and then we start getting into tech, natural gas, silver, marijuana. It's important to recognize what's going on from the perspective of capital rotation. So anything that is up this morning, look and see if it's running inverse of the market. And when it comes to these sectors, things like the marijuana sector or natural gas, bonds like the TLT, they're very often not going to do what the market does, right? They're inverse beta. Looking at the marijuana sector this morning, most of them are up. I would be looking for an opportunity to flip that around. But if we have a red to green setup, then, take what we can get. So for an example here on Tilray, yesterday was a red day. Could call it a micro double bottom in that sense. We're up slightly. If this was going to be a red to green, then we would want to focus on running this thing back up in the pre-market above the current day's open of yesterday. Now, we use emerging markets to kind of get a grasp of what's going on in the global marketplace. When this is bid up, we consider the market to be in a risk on sentiment. It's not up by very much, but it is up this morning. So we're going to kind of want to lean into that. All right, so looking at the chip sector, everything looks really good over there. If we're looking for a fake out play or of running this thing to the downside, then anything that is up would be my target, not stuff that's already down significantly. Looks like we got a red to green setting up here on NVIDIA too. The idea would be to see NVIDIA in the pre-market get higher than the open of yesterday. Now with this situation, if we could get in between these two lines, that's 190.55 and 186.96. If we can get in the middle of those by the open, then we can look for the open of yesterday to be support and look for that rally out. That would be our inside day breakout. The last bit of resistance would be around that 192 area, the high of the previous day, right? May 31st. So this red to green setup, the way that I like to play them, I really want price above yesterday's open. Now it doesn't have to, but if I've got a lot of names on my list, because a red to green is prolific, you will find a lot of them all over in the morning. If I got a lot of names on that red to green list, then I will filter or narrow down that list considerably by focusing on ones that are at least above the previous day's highest or the previous day's open point, right? So that'd be 186.96. So we got a little bit of work to do on NVIDIA if that's what our criteria is. Same thing with AMD. And when it comes to an inside day breakout, I would much rather break out of a very narrow range bar than a very large bar. Right. So for AMD, we've been sitting inside of a reasonably decent range bar for 2 days. We're looking for that inside day breakout play now. The significant move would be above the 102.90. That would just give us a break run towards the top of the Bollinger Band, say around 107. It's not a bad move. Still be the same red to green criteria. I want to be higher than the previous day's open, or even better, higher than the entire day of yesterday. All right, so looking at crypto, we're doing pretty good over there too. A lot of names that should be recognizable. PayPal, AMD, Riot, Coin. So more than a few recognizable names. To me, it's important, especially right now with the liquidity being what it is. and the EV sector. Some legacy names: Ford up more than 1.5. Now, the move has been pretty consistent to the downside. And if we do get that breakout in Ford, the 50 period moving average, which is that orange line, is going to be our target. General Motors as well, up at least 0.5% this morning. That's not too bad. Still want to see the carry through or the carryover. So for that red to green, we're already near or above the open from the previous day. So I'd want to see it get above the high of yesterday. That same orange line, 50 period moving average, we've been running pretty consistent against it, and persistence beats resistance. These flows have been a little weird, guys. So just a heads up, the way that the dollar has been running in this consolidated package with big breakouts and the moves in the bonds moving very, very similar to stocks. We want to see these things get decoupled, get back into their own lane, so to speak. Significant move in oil again. Gold is breaking out this morning. When it comes to the dollar, keep an eye on the VIX. See if those two are moving in tandem or if they're moving separately. Say, like yesterday, you could see when the VIX made that explosive move to the upside. So was the dollar making that move, right? Kind of goes back to the earlier discussion where we're talking about the dollar being a global risk indicator in its current situation. So we want to see the stocks and bonds decouple. Keep your eye on it. It doesn't need to be a particular bond. You can look at the 2-year, the 10-year. Doesn't matter. Extreme moves are what you really want to focus on. Use them as a warning to either tighten your position or look for an exit. When we're coming up into a resistance zone or a pivot point, look for these to diverge or look for a significant break to kind of give you that heads up on what are we going to do at that pivot point. We're going to make it through. We're going to reject. Says OPEC Plus is highly likely to agree to an output hike in the range of 600,000 barrels for July. That's where the bump came from in oil. That took us from 112 on the WTI to 114 and a half, 114 and a quarter. President Zelensky is still out there talking, seems like, because we're still seeing news on him from Finance Juice. And as for the rest of it, guys, just watch that econ today. It's going to be the deciding factor for a lot of the rest of our plays. Focus on the MOT. That would be the monsters of tech: Apple, Microsoft, Amazon, Nvidia. Most of them are showing this cluster, this consolidated pattern. And if you're using CDR or CLR, OCR, if you're using any kind of single candle analysis, then we have been getting higher highs and higher lows if you're using candle by candle analysis, OCR analysis. So if you think about it, really, after that expansion breakout from Friday, for Tuesday and Wednesday, we did a whole lot of running around and we didn't really get anywhere. They're not going to continue to spin their wheels like a hamster running in a circle, right? One way or the other, they'll get their break to the upside and will challenge that angled trend line, or they're going to give up on it and dump it back down. It's a market waiting for a catalyst. So I got everybody. Be careful, be safe. I'll see you all in the chat room.